JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 18th of August 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to check us out here on jfdbank.com and click on the research tab right there on the top. So, before I continue, I can see in the chat room here, Evu, yep, good morning to you too. So, coming back to the charts and starting off with the charts, of course, the first one I'm going to pick up here is Nikkei 225. To be honest, I'm not going to spend too much time on this one because the idea still remains the same. I mean, as you can see, this hurdle here continues to do its job and continues to provide support. So, in other words, for now, we will stay careful here in order to aim for the further downside, of course, break of this, and we would like to see the daily candle staying below this. Yep, that's what would be needed. There we go. Finally managed to squeeze this one out. But yep, in other words, guys, for now, I mean, yes, we are still kind of trading lower here. You can see some of you might say that maybe this is a possible descending triangle, which, of course, it could be the case. But however, even in that scenario, still a drop below the lower side of the triangle here would be needed. So, yep, until then, we will just remain calm here and keep an eye on the price action. Hong Kong's Hang Seng Index. So, last time I talked about this one, I talked about this downside resistance line as well, taken from the high of the 28th of June. You can see that we managed to reach that downside line here. I mean, we need to update this arrow, no longer valid like this, but basically it drifted back down after finding support not far from that 26,862 territory, and it fell back below the downside line. So what's going to happen next here, or should I say what could happen next here, is first of all, let me just adjust a few levels, probably to kind of keep an eye on some of these. So you can see that, yes, the index is drifting lower. If it continues to trade below this downside line, certainly the lower levels could be met, but I would actually now prefer to go slowly on this one. If we drop below yesterday's low here near the 25,615 territory, then yes, of course, this confirms a forthcoming lower low, and potentially we could start aiming for that 25,093 territory, or even this 24,749 level right here, marked by the lowest point of July, and then we will take it from there. Now, jumping into another index, and that's the German index DAX, and yep, the price here, as you can see, initially was moving lower, and initially was drifting below this upside line, below this 15,851 territory. But this is what I keep saying all the time, that wait for that daily close, and this is one of those good examples of why you need to do so. So initially it was looking very bearish, and then it climbed back up here and ended the day above this upside support line. However, I'm not really getting that comfortable with the upside yet, because what I would need to see here is I would need to see a push above this 15,961 territory. I spoke about that level yesterday, and I said that in order to get a little bit more comfortable with the upside, then yes, a push above that barrier would be needed, and then we could aim for that all-time high, and yep, further, of course, for higher levels could be possible as well. So looking at the cash index right now, we can see that the price is balancing somewhere around the 15,940 territory. So basically, it's still stuck above this upside line, and but below this this is 15,961 territory. If we climb above it, then yes, higher levels could be met. For the downside, I still need to see that daily close below the 15,851 territory in order to get a little bit more excited with the downside. Nasdaq 100. So looking at this picture here, you can see that it drifted lower yesterday. However, it managed to close and stay for the day above that 21-day EMA, and this just kind of proves how important sometimes these EMAs are, and in this scenario you can see exactly why. So for now, I would say if you want to go for the upside here on this one, guys, then yep, wait for probably a break above the current all-time high, just to be a little bit more on the safe side. The cash index right now is trading at around 15,020 territory, so not far from that psychological 15,000 level, and the most importantly, still above that 21-day EMA. However, if it drops and stays below that 21-day EMA, then certainly yes, we could consider some lower levels, but at the moment I'm kind of stepping away from this one a little bit, and I'm just going to observe the price action. The dollar index pushed nicely to the upside here, overcoming this barrier, and this is what I said to you guys yesterday, apart from the scenario where I mentioned that there could be a bearish 3 scenario, but a confirmation for that would still be needed, which we didn't get. So that means that we are kind of sticking to some other plans here in other scenarios. So one of those scenarios initially that I mentioned was that if we pop above the 92.80 territory, then my next target is the 93.19 level, which is marked by the highest point of July. And as you can see, we've reached that area, and well, kind of, I would say maybe fell shy by a few points from reaching that area, but that's, to be honest, that's a good result here, good achievement. I'll take that. Now what I'm gonna do here is I'm gonna go further, and I'm gonna look at it this way. If we climb above that 93.19 territory and we stay above it, then yes, my next target is the highest point of March here, near the 93.44 level, or the 93.55 zone marked by the high of the 5th of November of 2020, and then we will take it from there, guys. So long story short, for now, guys, yes, it is leaning a little bit more towards the upside. However, the confirmation breaks are needed. In terms of the downside on this one, now this is where probably a few adjustments have to be made. First of all, let's get rid of all these highlighted territories right here, and let's mark the low of the 13th of August here, near the 92.47. That's going to be the interesting level that I'm going to be keeping a close eye on, because in a way we have this this upside support line right here, which if gets broken, then certainly could open the door towards lower levels, but I will get a little bit more comfortable with the downside if we just see a drop below this hurdle here, the 92.47. Gold is stuck a little bit here. I mean, yesterday it got held. It formed a doji, as you can see here, but to be honest, looking at the way everything is shaping up right now, I'm going to be very careful with gold, and yeah, so for now, because although it did form a potential reversal signal here, still, as you can see, it remains above that 21-day EMA. So that's what could outweigh the doji candle here. So and the fact that we're not far from this downside line, of course, that also creates this possibility to maybe fill up this little territory here, and then we will have to decide what we're going to do after. For now, this downside line is the one to watch, and of course keep your eyes on that 21-day EMA. If we continue to trade above it, then yes, like I said, my next target is this downside resistance line. If we fall and stay below the 21-day EMA, then that's where we could maybe start looking at some lower levels. Silver is also interesting because it's currently getting a hold up near this lowest point of March, near the 23.78 zone, and as you can see, so far it's doing the trick here. So far it's working out okay, because the idea which I mentioned was that if we gotta get a hold up somewhere around here, then yep, another slide could be possible. However, if we climb above this area and kind of stay nicely above this area, then my next target is the 21-day EMA here, near the 24.50 level. WTI oil very quickly on this, so yep, continues to trade lower. It's coming closer to this hurdle right here. It seems like it wants to come closer to this hurdle right here near the 65.11. But again, I would say this is the point, this is the area where you need to be a little bit more on the careful side. Yes, we are trading below the 100-day EMA. However, the 100-day EMA didn't prove to be a very strong one recently to keep an eye on, because again, you can see here in the beginning of August, it kind of drifted below it, then reached this hurdle here, and then rebounded and pushed back up. So that's why I'm going to stick, for now, I'm going to stick to this hurdle here, the 65.11. If you want to aim for lower levels, wait for at least a drop below that area, because this would confirm a forthcoming lower low. Ripple, very quickly on Ripple, and yeah, so as you can see, it drifted lower, and this is what I talked about, guys, in the beginning of this week, that if Ripple finds good support here near the, resistance here near the 1.3498, it could drift a bit lower. But if it finds support somewhere near this 1.10 territory, then we might see a nice rebound and a push back to the upside. So far, we're seeing exactly that. But if you're a little bit more on the cautious side, what you can do here is wait for a push above the 1.3498 territory right here. This would confirm a forthcoming higher high, and potentially more buyers could join in. But if it starts falling back below the 1.10 territory, then yep, a larger correction here to the downside might be possible. Now, jumping into a few pairs, AUD and CHF, and this is where I need to kind of refresh the chart a little bit here and kind of start over again, because first of all, yes, we are trading below some of these tentative downside lines here, and one you can draw it this way, but also there is another tentative downside line which you can draw this way right here. And the fact that, yes, we're still drifting lower, I mean, that kind of, yes, doesn't give too much positivity here. And we are currently resting near this lowest point, the current lowest, or actually it's no longer the current lowest point. The lowest point was already reached today. But as you can see, this level somehow still the previous low of August here near the 0.6221 is still doing its job. So let's see if we can clear that level. If we can, then yes, my next target is the lowest point of December of 2020 near the 0.6583 level, and then we will take it from there, guys. In terms of the upside, well, at least a break of this steeper downside line taken from the high of the 6th of July would be needed. Until then, I'm just gonna lean a little bit more towards the downside. Don't get me wrong, we might see a bit of a retracement here back from this 0.6621 zone. However, if this downside line continues to provide resistance, then yes, another slide could be possible then. But that's why I'm saying that if you want to get a little bit more comfortable with lower levels, then wait for a drop below that 0.6621 level. Aud Cad also in a similar trading in a similar fashion, yep, we are now resting near the lowest point of August here. Sorry, not the lowest point of July. There we go. Near the 0.9146 level, if I'm not mistaken. Yep, there we go. That's correct. So in order to go for lower levels, guys, then yes, a break of that level is needed, because such a move here would confirm a forthcoming lower low. Now, in terms of the upside, certainly a break of this downside resistance line here, taken from the high of the 25th of February, would be needed, also a push through this barrier here, the 0.9233 territory would be ideal for more buyers, because at the same time we would also be placed back above the 21-day EMA, and yep, like I said, this could bring a bit more positivity. However, at the moment the main scenario is a little bit more towards the downside on this one, yep, let's see how this is going to play out. USD CAD here is back above this 1.2605 territory. I spoke about that level, and yep, what I said, that if we climb back above it, then yes, this increases the chances for a further move north, because at the same time we would be back above all of the EMAs here, especially this 200-day EMA. So for now, even though we're seeing a bit of a corrective move here lower, we're still in the positive territory. I mean, sorry, not in the positive territory, but we're still, the outlook, the near-term outlook still looks a little bit more positive, especially if DXY starts popping further north. GBP Aussie found resistance. This is where I said that that's going to be my next target. Yesterday I mentioned this, that I'm not going to drag this one way too much to the upside. I'm just going to aim for this 1.8972 territory, and yeah, so we found a good hold up here, and now the big question here is, can we see a bit of a corrective move back down? Let's see if this is not going to end up being as a range. I mean, I hope not, but that means that if we start moving somewhere below the midpoint of this, let's say, assume this is a range, if it falls back below the midpoint of this range, then yep, we could go for the lower bound of it. If we clear the upper bound of this range, then certainly yes, we'll go for some higher levels. This one's a bit straightforward here, but again, the problem here is that it could continue oscillating inside this little pattern here in between these two levels, and yep, that means that we'll just have to wait for a little bit until we could get maybe something of an interesting opportunity on GBP Aussie. Euro against the Russian ruble. Now, this is something that I like to look at sometimes. These exotic pairs here, and you can see that the pair is now breaking this key area of support near the 86 territory. There we go. So the 86 territory is currently getting violated. Let's see if we can stay below it. If we can, then yep, certainly lower levels could be met here, guys. And we could go maybe for that 84.29 level, approximately around here, or even lower. So keep your eyes on this one. At the moment, you can see there's it seems like a perfect descending triangle pattern here. So let's see if that's going to work out or not. And finally, EURUSD. So yep, drifting lower, and as you can see, the pair fell below that 1.1752 territory and ended up testing the 1.1704 zone, where it's currently resting. And that's the lowest point of March of this year, and if I'm not mistaken, also the lowest point of this year. That's correct. So now this is where the critical moment is. I mean, will we go for a new low for this year? It seems that if the dollar continues to accelerate, then yep, most likely yes. But first we need to see that confirmation break below this area, below this hurdle, below the 1.1704, and then yes, we could get a little bit more comfortable with the downside scenario. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. Thank you very much for joining in. I really appreciate your views, guys, your likes, your comments. I really do. So I really appreciate that. So if you want to catch me tomorrow morning, as always, with my Traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.